Welcome all to GEPL Capital's another market outlook video. I'm Sanket Bendre from Fundamental Research team, and let's start with this video. And let me share my screen so we can move. I hope my screen is visible now. Yeah. Okay, so in this video, we will be discussing certain points regarding tariff as well as again monetary policy that were discussed on the previous few days. So let's start right. So in this slide, you can see I have jotted down a tariff timeline indicating like what exactly happened over the last few months on the tariff side. So if you see on the February 1st, Mr. Trump started imposing 25% tariff on his neighboring countries, which includes Mexico and Canada. So this was primarily due to the fentanyl trade that was happening between illegally between both the countries. So in order to stop that, Mr. Trump had to impose 25% tariff on both the countries. If we move ahead, we saw that he halted that tariff for another 30 to 60 days in order to just have further discussion with their key leaders. On April 2nd, which was noted down as a Liberation Day, Mr. Trump announced global tariff with a baseline of 10% of tariff for each country and a variable rate based on different countries. So this was basically to ensure that there was no trade deficit between countries and in order to lower the competition from the international market. So in order to do that, Mr. Trump had invoked this tariffs. On April 9th, he paused his imposition for another 90 days in order to have discussions with several countries and have some trade deals in order to have a smooth trade talks and have a good amount of and have a good tariff rates. On July 30th, that is 8 days back, Mr. President Trump had announced a surprise 25% of reciprocal tariff plus penalties on Indian goods and imports. So this was very sudden news as over the last few months we had heard various discussions related to certain bilateral trade agreement happening between both the countries. However, suddenly on 30th July, Mr. Trump announced this 25% plus penalties of tariff. So that impacted the market to a certain extent, but I would say it was not that much as Nifty was impacted by approximately 1%, close to 1%. So as the markets had already discounted the 25% of tariff, but the penalties part was the key thing to watch during this term. On August 4th, Mr. Trump said he will impose substantial tariff on India for buying Russian oil. As I mentioned, that the penalties part, this is the key part as India was purchasing Russian oils from oils as well as other materials from Russia. In order to do that, he was imposing that penalty tariff. And furthermore, in counter to this threat, Indian Foreign Ministry had said that US is also indulging in trade with Russia. So this was like a bogus imposition on India itself as the US as well as European Union were are purchasing Russian oil given the good rates and to support the economy overall. On August 5th, sorry. So on August 5th, Mr. Trump had imposed tariffs substantially over the next plans to impose 24 tariff over the next 24 hours, and the imposition of tariffs on pharma as well as semiconductor chips were also in line. Given these both sectors were excluded till now, but now with pharma and semiconductor chip, we're also going to see certain tariffs. On August 6th, we saw that US imposed an additional 25% of tariff on India, and now the total tariff on India reached to 50%. So, despite this hefty tariff, Indian markets remain stable. I would say stable to on slightly negative given this there was some positivity in the negotiation talks between both the countries as these tariffs were supposed to be imposed from 27th of August. Plus, Russia is also expected to visit India, and India is expected to. Plus, there is expectation that India and China are also expected to have a trade talks. So these are some key pointers, key positive pointers which led to stability in the markets to some extent. And on August 8th, that is today, we saw that NSA chief Mr. Ajit Doval is visiting Russia, and he has mentioned that Russia is soon expected to visit India as well. So this further clarifies that there should be some trade talks during this uncertain times with US. So it has also been heard that India, Russia, and China are also expected to have some trade deal talks between all these three countries to have a smoother function during this tariff impositions from the US. So here we have mentioned certain products that are exported the most from India. So this includes electronics, which are the major component. Next will be gems and jewelry, and there will be pharma products. Third, fourth will be machinery parts, refined petroleum products, articles of iron and steel, textile articles, auto and auto components, non-knitted apparel, organic chemicals, knitted apparel, and seafood. These are some of the key uh, products that have been exported from India to the US. On the RBI monetary policy front, as you saw 2 days prior, that RBI Monetary Policy Committee had unanimously decided to keep the repo rate unchanged at 5.5%, and they continue to keep our interest stance on the basis of. So this decision comes after 100 basis rate cuts over the last 3 meetings that happened in 2025 itself. So RBI governor also has said that the headline inflation is low because of the volatile food prices, and they have mentioned the CPI inflation expectations for the upcoming quarters, which include the second quarter should see 22.1%, third quarter should see 3.1%, fourth quarter should see 4.4%, and first quarter FY 2027 should see 4.9%. So if you see for FY 2026, the CPI inflation forecast was previously 3.7%, and in the recent week, we saw that RBI had lowered that forecast to 3.1%, given they are seeing a lower headline inflation in the food prices. So this is overall a very positive update on the monetary policy front as well as on the inflation front. And furthermore, on the GDP side, the RBI has maintained that 6.5% domestic growth for FY 2026. This further indicates that despite the uncertainties in the market, Indian market should remain healthy during these uncertain times. And the growth story, or long-term growth story of India remains intact with this news. So to conclude this video, I would say that even if we are seeing this trade tariff talks, India's export to the US is approximately 2% of the GDP, and overall only 20 it is expected that 20 basis point should only 20 basis point of impact should be seen on the GDP side. So overall, on the economic front, I would say this tariffs are with from the US should not match the overall economy of India. However, there are companies that primarily export to the US. So these are some of these companies will be impacted heavily. However, government, if you see that government is working with these companies to provide certain measures and protect their trade with the US. So what I would say that during this meaningful correction, this creates an opportunity to buy and accumulate good growing companies in the market. So a meaningful correction creates an opportunity to buy and accumulate good growing companies, given we get good valuations during such time of term. So thank you for watching this video till now, and do like, share, and subscribe our GEPL Capital YouTube. So thank you.